What's up? So there's a question about this cell that is still holding on BTC. And this I just wanted to show you how I took this cell, okay? Remember, we in our community, we follow the fundamentals. So actually, I want to look at the commercials, what they are doing, and I'll be looking at what the retailers are doing on the same time. Then I look at the treasury bonds, the interest rates, and also the gold futures, because you know that the price of gold affects other factors. So to be precise and very fast, I'll just go very fast to quickly to the fundamentals, and I'll not want to take a lot of time. Remember, I'm following the future. My decision and everything I do from the futures. So I'll go to the futures and I look for the BTC here. Okay, when I got the BTC, actually, I'm looking at the fundamental part of it. Here, I know that we have some levels we use, but when it comes to BTC, only look at the valuation. So for this one, I'll just switch to a daily time frame because uh, this one is kind of a crypto. So I'll come here, go to my tools, then I'll be looking at the fundamental part of it. So I'm actually going to look at the how do you call it? I'm going to look at the valuation part. Then when I look at the valuation, I want to see in this valuation, what do we have? Allow me to check out something here. Valuation indicator is somewhere here. Yeah. You see, I want to only go short once the commercials are doing what? The commercials, not commercials, but once the price is overvalued. When I look at this particular setup, the price was overvalued here. And hence, once it's overvalued, I look on the daily time frame, then I look for supply zone, then I look for short the price. So here we see that here we have a lot of things here. These are not sentiments, these are not uh, the normal indicators, these are just you get them, they get the real report from the COT data. Okay, let me just double click, I'll show you what we have here. Just a minute, sorry. Just a minute for that. Let me click on this one here. Okay, you can see number one, symbol one, it's blue, symbol two is gold, symbol three is purple. What is this? When I click on symbol one, it's just DXY. I don't have to go back and start looking at the dollar index. That's the dollar index. Symbol two, this is gold futures. Remember the price of gold, it affects other things. So you need to also to understand the price of gold. So we have to look at the gold future. My internet is a bit slow, so a bit low. That's why it's not responding here. But I hope it will get to respond. Let's move on. We'll come back. When we go to number three, we have the treasury bonds. I don't know why we're not getting a responding to this one. My internet's a bit slow, guys, and allow me to pause. Then once the internet's fine, I'll just resume my recording. Let me do this here. Was it? Okay, our internet's back. So let's look for symbol two. Symbol two, these gold futures. We look at the gold futures, what are we expecting? Number three, I'll go to symbol number three, which is just the US Treasury bonds futures. You know what is that? Do your research, understand what it is. So these are the things we use. Every time they are overvalued, every time the price is overvalued, to be overvalued is to go above the broken line there. This means that the price will always fall. Every time it's undervalued, you see like here it was undervalued, price will buy. So here I looked at that, and once I saw that the price was overvalued, the next thing I'll do, I'll now identify a supply zone, a daily supply zone. And then look at this, we can see generally if I have to use the supply zone, the daily without refining it, I'll give it a red line there so that you can be able to see it. And also I'll increase the size, or let me make it 4. You can see there's a supply here, and also above there, there's another supply. So the price is within my supply zone, and hence there's a very high probability level to short the price. You can see there. Then I'll go on the lower time frame, and I look for a short, and look for an entry to look for a short position. So once I saw this, then I came here and I looked at it on right where it is right now. I just went into my 15 minutes, looked for the shift. You know, there's technical rules that we apply once you know what you're looking for. See the price waited for the shift of price, it came to my level. And this is the future. Remember, when it came to my level, then I looked for a short position. So I sold it on Friday. You can see on Friday, that was around 6 o'clock, 6 p.m. Okay, my local time from where I come from. So when we look at that, then I'll just go to BTCUSD. Then I look for a sell because I know that the future is selling now. I'll go to BTC. You can see that first I'm having just the BTC one, but when I'm shorting my position, I know that I'm selling against the dollar. I'll just come here and look for Coinbase. This way I open my trade. So the price went down. And again, it retraced back to my level. Let me go to a bigger time frame, like 1 hour or 45 minutes for clarity of my chart. And you can see here, that's where the price came back to my level here, and I happened to open a short position on Friday. But this weekend, the price has been playing around up and down, and it's now retracing back to my level. But no problem, regardless of what it's gonna do, I'm at break even, and if it violates the level, whenever the price opens again, the new week, new volatility, we'll still look for our short position. We are not going to buy. We're selling this pair, all right? So guys, see you on my next video.